thing I can't stress enough that we don't want to do is start picking tops and bottoms here. So just because it's this high, does that mean that we shouldn't buy it? Absolutely not. And history is beginning to show us this. Some of the price action we've seen on the currency pairs and some of the commodities, they're hitting record levels and they're still going higher or lower. So again, we don't want to get into picking tops. We want to do the analysis based on the correlation to the other markets and using the vantage point. So that's where we're sitting at that. So now let's go in and look at some of the currency futures and see what's happening there. Now with the currency futures, we're going to start off here with the yen futures. The yen futures have crossed the triple EMA. They've moved higher. Our US-Japan trade cannot get any traction, but we're trading essentially a range here. But we do have a buy signal. This suggests further yen strength. However, if the analysis is correct on the US dollar and more importantly on those equities, if those equities reverse and start moving higher, that will put a significant amount of pressure on the yen, and the US Japan will come flying out of that 88 to 89 area very, very quickly. So we don't want to, again, we don't want to lose sight of that where these correlations are, and we'll get into some of those correlations at the end of the presentation a little closer so everybody can see it. But for now, we want to keep our main indicators up on the screen. So predicted medium and long-term differences both positive. All indicators here suggest that the yen is going to continue to strengthen. So we're likely to see further yen strength this week unless we see that reversal in those equity markets, and then the drive on the yen strength should probably come to a very abrupt end. So we'll get into that when we get into the US Japan currency pair. Now looking at the Euro FX futures, we've got an interesting play happening here. Now we're running essentially flat. Our triple EMA crossover is working very hard to try and give us that buy signal, but the reality is we're still a little bit mixed here. But we can see that the 3-day is breaking away from the 8-day and the 18-day predicted moving average. We've closed the week at 123.93. Euro US currently, we can see that it's played this entire week in this essentially just above from 122 to 124. That's been the range the entire week. So we could say that we've got a bit of a base forming around 122. We've got comments from George Soros saying that Germany is going to kill the euro. Certainly want to take that comment with a grain of salt. I've talked about it extensively with the fact that the global banks have huge reserves in the euro. The euro is not going anywhere. So I'm sure Soros made money on that comment, but the reality is we want to just really take that comment with a grain of salt, because what we're seeing is that we've got our predicted true strength indicator, our predicted MACD, and our predicted medium and long-term differences are all pointing higher on the Euro FX futures contracts. So we want to avoid market noise like those kind of comments from Soros and some of the other people, because remember, these same people made all these comments about the US dollar a year ago, and then the US dollar proceeded to become moved to its strongest level in 5 years. So we really, we don't want to forget that. So this is where the beauty of intermarket technical analysis comes into place, with the fact that we're looking at price action here. We're looking at pattern recognition. We're looking at the correlation to the other markets. That's what's important here. Rumors, innuendo, don't really concern me. I'm more interested in what's black and white and what I can see right in front of me. Now, I'm certainly paying attention to what's happening in the Eurozone, but I'm not trading off of it. So with that said, let's go in and have a look at some of our currency pairs. We've had a pretty decent week on a number of these currency pairs. Now, the one other, before I leave though, the commodity side, the natural gas. We had a nice trade on the natural gas contract. We picked up about just under 19 cents, $1,890, buying off that predicted 18-day predicted moving average from Vantage Point. I suggested that the natural gas contracts were going to pull back. I did not want to sell it. When it pulled back, I suggested we would buy it. Turned out to be a very nice trade. My opinion is that natural gas has plenty of room to extend, and this minor pullback, this is what I've often talked about, letting the market come to us, where you've got people trying to scalp up top, selling positions, sitting back, waiting for it to come to you, entering into a position, staying with the very clear overall uptrend on natural gas. So I guess what I'm saying is the last thing we want to do is sell in an uptrend. So with that said, it was a nice contract, but again, the natural gas is part of the commodity sector, and with the crude oil, the natural gas, all of those, in my eyes, they're both pointing higher. So that's where we're at with that. We're going to go in and now look at some of the currency pairs with, again, the bias is with the US dollar index, and the bias here is clearly pointing to further US dollar weakness. Now, with the Japanese yen currency, with the US Japan currency pair, I should say, we can see that we ran a long period of this flat. It's run pretty much flat between 90.50 and 93. We've now got the triple EMA crossed over to the downside. Couple of problems here. Now, our predicted medium and long-term differences are both heading into oversold territory. We've crossed the zero line on both. However, US Japan clearly playing a range here. So we've got this one lone candlestick sitting down at about 88.17, which is a point of interest to us, but we've also got a fairly strong base of support sitting at this 89 level. So to start the week, I'm not recommending shorts on US Japan solely for the reason that I've got mixed signals on those equities, and if those equities push higher, US Japan is going to shoot out of the 89 area so fast that you won't believe it. So I'd be very cautious about shorting at this level. Now, I would be far more comfortable actually shorting it if we can get if we can have a sustained break of the 88 level. I believe that US Japan has a shot towards the 84, 80, 83, 84 level. That's entirely possible. But right now, my bias remains extremely guarded with short positions at these levels. So good thing, a good thing to keep in the back of your head. And for this week, I'd be very cautious about shorts there. Now, looking at the US CAD, we've got a flat signal here. The market is hit and is basically congested, sitting around the 18-day predicted moving average. We've actually closed about 8 pips below it at 103.50. Now, our 3-day comes in at 103.70, 103.43, and 103.58. So we have a considerable amount of resistance in this area. We have mixed signals again, so we do not, the majority here is that the triple EMA crossover is still pointing to the downside. We do not have a confirmed buy signal. Our predicted long-term difference, you can see there, it's hit the zero line, but it's not crossing over it. Predicted medium-term difference has turned flat. Now, our predicted MACD has crossed the trigger, however, still below the zero line. Predicted true strength indicator from Vantage Point, a critical indicator right here. We can see that it's come up to the trigger and backed right away from it and is now starting to move lower. This